Hello students, my name is Dr. Rajesh Kumar Srivastav, Assistant Professor in Department of Commerce, the Bhopal School of Social Science. In this today's lecture, I am going to discuss about the practical questions of reconciliation. Before this lecture, in first part I have covered the theoretical part of reconciliation statement. Here in this lecture, I am going to discuss the practical portion of reconciliation statement. Before starting the practical question, we must know about the steps. What are the steps to solve the question of reconciliation statement? There are three steps. Number one, identification the transaction, whether it is expenses or income. Means before starting the question, whatever the transaction is given in question, we have to identify that it is expenditure natures or income. Second step is see the impact of the transaction on profit or loss. Means we have to identify that if it is expenses, it means the profit will decrease due to the expenses. If it is income, it means the profit will increase. Now the final step is plus or minus will depend on the impact on base book. Means base book, if expenses by nature that transaction is, it means the profit will decrease and the impact will be on base book, means profit will decrease, it means we will have to minus that transaction. If it is income, it means the profit of base book will increase, means we will have to plus that transaction. Now see the how to implement this steps. Here is the question. Prepare reconciliation statement from the following information. Here we have two profits, profit as per cost book and profit as per financial book. Usually I try to start this question profit as per cost book. It means if I take profit as per cost book, it means base book will be financial book for me. This is the financial book. It means this is the question, profit as per cost account is 20,000 rupees. It means the answer is profit as per financial book, that is 23,500. And if we start from 20,000 and we have to reach 23,500. Let's see the impact. It is the question, loss on sales of furniture, that is rupees 2,000. Interest received, that is 400 rupees. Rent received, it is 300 rupees, 3,800 rupees. Interest paid, 600 rupees. Profit on sales of fixed asset, that is 5,000 rupees. Provision for bad debts, it is 3,200 rupees. And transfer fees, which is credit, that is 100 rupees. Now this information or these transaction given in question, we have to identify that for example, loss on sales of furniture. Loss on sales of furniture means it is a kind of expenditure which decrease the profit of base book. If I start the question profit as per cost sheet, it means the base book will be financial book. Let us see how to solve. Here is the solution. I start profit as per cost book, which is 20,000 rupees is given. These are the following transaction which we have added in preparing the reconciliation statement. Interest received. Interest received is purely financial book transaction. It means it is the income. Due to this income, profit of financial book will increase. Therefore, we will add this 400 rupees interest received. Rent received, this is again the income. It means profit of financial book increase. So we will add 3,800 rupees. Profit on sales of fixed assets. It means if we are selling any fixed assets, and due to that selling, profit of financial book will increase. It means we will have to plus these 5,000 rupees. Transfer fees, this is again the income for the financial book. It means we have to see the impact of the transaction on financial book. Transfer fees will increase the profit of financial book, therefore we will add 100 rupees. Now we will sum all these four items: 400 rupees, 3,800 rupees, 5,000 rupees, 800 rupees. The total of this amount is 9,300, which we have to add in 20,000 rupees, means total become 29,300. Now see the item which is we have to minus in reconciliation statement. Loss on sales of furniture, which is 2,000 rupees. It means if there is loss due to sales of furniture, the impact of this expenses will be on financial book, that is profit of financial book will decrease, therefore we will minus these 2,000 rupees. Now interest pay. Interest paid, that is also the expenditures for the financial book. Due to this expenses, profit of financial book will decrease. Therefore, we will deduct this 600 rupees. Provision for bad debts, that is the expenditure which shown in debit side of financial book. Due to this, the profit of financial book will decrease. Therefore, 3,200 rupees will be minus. Now we will take the total: 2,000 rupees, 600 rupees and 3,200 rupees. The total of these item is 5,800 rupees, which we have to minus from 29,300, means 29,300 minus 5,800. The balancing figure is 23,500 rupees, means profit as per financial book is 23,500. Since I started this question with profit as per cost book, it means I have to reach up to profit as per financial book. That is our answer as per the question. Let's see the question. Profit as per cost book is 20,000 rupees and profit as per financial book is 23,500, which is the solution of the first question. Now move for the second question. Here we have the second question. Prepare reconciliation statement from the following information. Information are given: profit as per cost book, that is 75,000 rupees. Profit as per financial book, 44,625 rupees. Office overheads overcharge in cost account, that is 2,250 rupees. Provision for income tax, that is rupees 30,000. Transfer fees rupees 1,500. Director fees 3,000 rupees and depreciation 1,125 rupees. As I told you that I usually start the question with profit as per cost book. So target book will be financial book, which I have to see that impact of these transaction on financial book. If due to these transaction profit of financial book will increase, I will add these item. If profit of financial book will decrease, I will minus these items. Let us see in the question. Here is the solution. Profit as per cost book, which is 75,000 rupees. Now, office overheads overcharged in cost book. It means when the cost book is overcharged, financial book profit is not increased, not decreased. It is more than cost book. Therefore, 2,250 rupees we will add in reconciliation statement. Transfer fees, this is the income of financial book. Due to this transfer fees, profit of financial book will increase. Therefore, we will add 1,500 rupees in reconciliation statement. So, sum of 2,250 rupees and 1,500 rupees, that is 3,750 rupees. The total of these items 75,000 rupees plus 3,750 rupees. The sum of these two items 78,750 rupees. Now, these are the some items which we have to deduct. Reason behind provision for income tax. Provision for income tax is the expenses which is shown in debit side of financial book. It means profit of financial book will decrease due to this income tax provision. So, rupees 30,000 will be deducted. Director fees, this is also the expenditure of financial book. Therefore, 3,000 rupees we will minus. Depreciation rupees 1,125. This is also the expenditures which is shown in the debit side of financial book. Therefore, the profit of financial book will decrease. Therefore, we will minus 1,125 rupees. So, sum of these items 30,000, 3,000, 1,000 and 125. The total is 34,125 rupees, which we have to deduct from 78,750, means 78,750 minus 34,125. The balancing figure is 44,625 rupees. That is the profit as per financial book. Here is the answer. Let us see in the question. Profit as per cost sheet was 75,000 rupees, which was given, and I started with this. The answer is 44,625 rupees. Now, move for the second, another question. Let us see. Prepare reconciliation statement from the following information given below. This is the question of loss. Previous two questions which were related to the profit, and now this is the question where it is showing the loss. There is no difference. Whatever we were doing in previous questions, same practice we have to adopt here also. Question: net loss as per the cost book is 3,50,000 rupees. Net loss as per financial book is 3,41,650 rupees. Depreciation under recovered in cost book, that is 2,600 rupees. Office overheads recovered, office overheads over recovered in cost book, that is 6,500 rupees. Interest received 9,750 rupees. Income tax 5,300 rupees. Here is the question. Now, what is the solution? As I told you, I generally start the question with loss or profit as per the cost book. So, base book will be financial book for me, and means I have to add or minus according to the financial book. If the profit or loss is increasing, it means I will plus these items. If due to that transaction profit or loss is decreasing, I will minus. Let us see. Net loss as per cost book, which is loss, which is shown in negative value, shown in brackets. 3,50,000 rupees is the loss of cost book. Office overheads over recover in cost book. It means if the overheads, over recover in cost book means financial book there is no impact, means it will be more than. Therefore, we will add 6,500 rupees. Interest received, this is the income for financial book. It means due to interest received, profit of financial book will increase. Means due to this, profit will increase. The same whether it is profit or loss. Since we have mentioned negative sign in the starting of this question, therefore the same we will do as we were doing in profit case. Interest received due to this 9,750 rupees, profit of financial book will increase. Therefore, we will add this 9,750 rupees. Means total of 6,500 rupees and 9,750 rupees, that is 16,250 rupees. Minus 3,50,000 rupees plus 16,250, the total will be 3,33,750 rupees. That is the negative value which is shown in brackets. Whatever the amount is written in brackets, it means that is the negative value. Now, what the expenditures or transaction which we have to minus? Depreciation under recovered in cost book. It means cost book profit is more than financial book. It means the profit of financial book is less. Therefore, 2,600 rupees we will deduct. Income tax, it is the expenditure for financial book which is shown in debit side of the profit and loss account, means in financial book. Due to this income tax, profit will be decreased by 5,300 rupees. Therefore, we will deduct this 5,300 rupees. The sum of 2,600 rupees and 5,300 rupees, that is 7,900 rupees, which is I mentioned in bracket. It means this is the negative value, and according to mathematics terms, minus minus will be plus, means 3,33,000 rupees 750 rupees, which is in negative, and 7,900 it is also negative, means minus minus plus, the total will be 3,41,650 rupees, that is the negative value, means loss as per the financial book, which is 3,41,650 rupees. This is the answer as per this question. Here we can see loss as per cost book, that was the 3,50,000 rupees, and net loss as per the financial book, that is 3,41,650, which we have reached here. It means there is some special steps which we have to follow to solve the reconciliation statement. Means we have two books, financial book and cost book. If we start question with cost book, the financial book will be base for us, and we have to see the impact of the transaction on base book. If the profit or loss is increasing, we will add. If the profit of base book is decreasing, we will minus. This was the summary, this was the technique by which we can solve this reconciliation statement. That's all about the reconciliation statement. This is the way by which we can solve the practical questions of reconciliation statement. Thank you.